good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Friday, October 29th. As always, guys, nothing that is discussed on the channel is financial advice. It is simply financial education. Simply want to teach people how you don't have to slave in that 9 to 5 if you don't want to. You can simply hustle 24/7 in the market and still be able to accomplish all those financial goals and dreams you have set for yourselves. All it takes is a little education and a little bit of work. I'm going to try to provide you some education. You got to put in the work. But that's up to each and every one of you guys to make that determination in the long run, right? But as always, let's get into it. So today I got the opportunity and privilege to join a couple of the Unusual Wills Twitch streams, right? Not to participate, I just wanted to listen, see what information is being provided. As normal, throughout the day, I have my Unusual Wills pulled up pretty much every single day that the market is open. And I'm constantly monitoring, trying to find opportunities. Something that sparks my interest, I'll usually make a video on. Other things, I just want to set a watch list and just keep an eye on it, right, specifically. So today when I did join, I did see there were a lot of newbies, obviously. Everybody is welcome. The guys always make everybody feel super, super welcome, and that's something that's really cool about Unusual Wills and the community that they have. Super humble, super friendly. Super willing to teach people, and that's pretty awesome to see, because again, back when I started trading, I didn't have anything like this. I wish I did, because man, it would have been such a difference maker. But nonetheless, I saw a question that kept getting repeated, right? And it keeps getting repeated pretty much anywhere you look, either on Twitter, social media, right? It's how do you use the alerts, right? So I'm by no means a guru or an expert at anything, right? I just feel pretty knowledgeable, and I feel pretty confident in my ability to be able to try to share that with people and put that good karma out into the world, and hope that they can use it to their advantage, and then hopefully one day maybe karma will thank me later, right? Kind of deal. So with that being said, this is going to be a video basically showing you another way to look at the alerts, because again, even though you monitor the flow, or even though you look at every alert that goes through Twitter, you still may miss some opportunities. This is a way you can kind of filter those opportunities to make sure you don't miss anything that you are interested in, right? So let's get into it. As always, we're going to start off at the Unusual Wills alert page. You go into alerts, go into options, click on alerts, right? It's going to populate this screen essentially, right? Whale alerts. So I always like to make sure that the freeze, the premiums are always defaulted on. I always have recent set, and then I always default by volume, right? Why? It's called Unusual Wills, so you want to find something unusual. That unusual usually is found in either amounts of money or volume. For these alerts specifically, I'm trying to trigger a high volume spike where volume is greater than open interest, because that's going to tell me you need to look at this, or give you an indication you need to look at this, right? If you click on filters, right, you go down here, you can set some dates. Specifically for me, I've set only this week, right? I want to see what opportunities either I missed potentially, or what some of the things that have spiked, what did I miss and why, right? Or why didn't I catch it? That's what I'm trying to filter out. So as you see, it's defaulted by Monday through yesterday. This is now after hours, of course, so that's why it's not the 29th, as you see. Expiring, so I've set the expiration for this Friday, the 29th, going through January 14th, the day before my birthday, right? I want something relatively soon, right? I don't want too big of a gap of time. Why? Well, if you get too much of a gap of time, your money may be sitting there for a while. I don't necessarily want any money that I'm playing in options to be sitting there for a long period of time, right? In options, remember, you don't always have to hold the contracts through expiration. Once you become profitable and you're happy with your gain, you can sell, right? That's something that a lot of people sometimes need to work on the most too, because a lot of times people will hold the contract too long and go from being profitable to being red. And that takes a skill, it takes practice, right? So just always remember that. Don't be greedy. If you get up in profit and you're satisfied with the gain, sell it. There's always going to be another opportunity, especially if you have a tool like Unusual Wills, because as you guys can see, there are tons of opportunities every single day. You just have to learn how to find them. But anyways, once you have that filter, it's going to give you this list specifically, right? So as you guys can see, it's going to give you the alert at date, by most recent, and the expirations over here, right? So obviously I'm not going to try to play something overnight. That's not something I'm looking for. That's really, really high risk, and that's more than I'm comfortable doing, right? I know some people do really, really short-term options. I like to give myself at least a couple weeks, if not a couple months, right? That's just me, my preference. So obviously what I'm looking for are these massive volume spikes over open interest, right? That's the key indicator that I'm looking for. Specifically, this is me. Again, that doesn't have to be you. I'm just giving you the example. So we see Lucid. Lucid just had a spike. It's been talked about a lot. Tesla just had a spike this week. I don't even know who this is. Genus. Okay. Facebook. Facebook always has alerts. Penn National. Sports betting. CBS. $95 call. 87. Nah. October 5th or November 5th. That's a couple weeks or a week and a half. A week out, essentially now. It's kind of interesting. Okay. We can maybe come back and look at that. BBIG. NFT play. I know this got delayed. So not necessarily something I'm interested in. I already have a call option for that anyway. Mark, this is an AI company, another AI company, but this is relatively on the cheap side. As we see, $2.24. Don't really know too much about it. Not something I'm really interested in. Palantir, a lot of people are really bullish on Palantir. Didi out of China, crap the bed, thanks to Kramer. He made a lot of people lose money, not interested in it. Tesla, no, not going to play SPY, not going to touch it. I've lost too much money in SPY. MRK, I already made $1,000 on MRK. Or Merck, excuse me, back in that first jump up, thanks to an alert that I played. Literally overnight, it spiked. I don't know if you guys might have remember that or not. There's this huge spike. The first one, yeah, here. So I bought that option contract like here on an alert, right? And I saw that it had a really green day. Bought the option right before the close. Next day had a red day. Next day after that, boom, you see the spike. Literally made $1,000 in a day and a half. It was pretty sweet. I was pretty happy. Did not hold that very long. As soon as I was up, I sold it. Because it was when they released that information for that pill for COVID. Neo out of China. Nothing out of China right now is really good. It's kind of high risk. XLF Energy. Nah, not going to touch that. PBR. This is out of Brazil. Call. 15,000 over 5. $10 is still kind of low. Nah, not going to touch that. That was on the 25th. This is a good example though here. So 14,611 over 2,434 for December 17th for Snap, right? At a $50 put. I know this says bearish, but just because it says bearish doesn't mean anything, guys. That's still a alert you can check, right? And we're gonna look into this one because I know Snap just recently took a dump too because of an overreaction in earnings. So if we look at the earnings, they beat on earnings per share. They were expected to report -10. They only reported -5, so that's essentially a 50% beat. Their downfall was this, right? Revenue. So they had a $31.39 million loss in revenue. And according to Snap, it was because of changes in the iOS platform for privacy. If you guys have an iPhone, I just recently got my iPhone 13, so I got an upgrade. When you first download an app or access an app on a new phone especially, it'll ask you, right? Like ask or allow app to track, or the other option is ask app not to track, right? Well, most people value their privacy, right? Especially in this day and age, right? So people select ask not to track. When you select ask not to track, it's literally affecting Snap, Facebook, Instagram's revenue. Why? Because when you're asking them not to track you, now they can't target ads to you, right? Like if you stop at a Walmart, now you don't see those Walmart ads. Or you stop at a discount tire, now they're not going to give you those ads for a discount tire, right? It's affecting the revenue and how much money they're making. So this is what they reported or stated in an article that I read, that this is what affected this number. So to me, that's an overreaction because that's something that can easily be fixed. You just got to work around it, right? Most technology companies will figure out a way to make sure that they get their revenue one way or another. But let's take a look, right? So as you see here, this is March 2020. This is the COVID dip, right? The major COVID dip. You see what? An uptrend, right? So this has been pretty consistently up and running. Looks like as of about here. Well, let's set a line right there. We've been trading sideways essentially. So what is that? Since May. A little bit of a run up here, but essentially trading sideways now since July. So July till October, trading sideways, and then you see this massive dip, right, off this overreaction we just talked about. So now that we know that, right, we see that the channel they were in essentially is 71 to 78. So this is where they were relatively in for a couple months. So now let's go look at the flow. See what the flow says, right? So if you double click or right click, you can just duplicate a tab, right? Go to flow. I already did that. Just to kind of show you guys an example, I'm going to type in Snap. We're going to go down here and we're going to set Opening trades, right? I learned this through one of the guys from Unusual Whales. Shout out to him. Super resourceful guy. Super helpful tip that he gave because it's helped me a lot just since I learned that. Essentially, what this is doing is going to put this little bag icon on the left, right? That you see on the left of the ticker. It's essentially telling you this is an opening trade for this position, right? So what I'm looking for at this point now that we're looking at the flow is I'm looking for large spikes in premium with large spikes in volume outweighing open interest, right? So automatically what stands out? 1.3 million. When was it bought? Yesterday. What time? 12:16. So towards the end of the day, this major buy, right, came in for a call at $58. We're sitting at 54, so that's a potential uptick, right? That's good. If you're buying an option contract, you want the price to go up, so this should automatically catch your attention. Something else that's pretty cool about Unusual Whales. Oh, and on top of that, it's a floor trade, so that's even better. That makes it 10 times better. On the left side of the ticker, there are these little icons, right? You can click on this, right? It's going to try to give you a potential look or view of the trade. But before that, I want to make sure that this is understood. All shown trades are possible legs, meaning they could be related to the original trade. There is no way to reliably tell which trades belong together. On a very high volume ticker, and then it gives a couple examples, this can be less accurate. It is not possible to determine the related stocks trade for multi-leg trades with stocks involved. Again, these are possible legs, do not necessarily have to be related. So again, it's just an example for you to kind of get an idea of what this money that's being put here could potentially mean. Hit this visualize button, and this is pretty dope, right? I've never seen another tool offer this, and I've had a few. So here you click into or dig into trade. What does it do? Right away you see that the $1.3 million is broken down into segments, right? What are the segments? Well, we have 6,400 sold calls at 70. Again, we're sitting at 54. That's to the top side. You have bought 6,400 calls at $63. You have bought 6,400 calls at $58. And then you have sold 6,400 calls at $55, right? Well, this top one gave them a credit of $218,000. This bottom one gave them a credit of $1 million. They literally collected premium for selling those calls, right? They have the shares. They're willing to part with them at those prices, right? Clearly understood. If you understand the fundamentals of options, that makes sense to you. If you don't, hopefully this will help. These ones in the middle are buys, right? So they're projecting the price will go up to these points and then pick up shares if they get assigned. So to make it easier, look, you can turn these two off if that seems confusing to you. Go down here and it gives you a perfect visual. They want this price to go up. You go down here, you hit profit and loss. It's telling you, right? If the price goes down, they lose money. Obviously, they want, for this $1.3 million, they want the price to go up. That's bullish. So now let's turn these on, right? Because this is interesting, and so is this. If you understand options, you kind of understand the strategy, right? Looking at the chart, you see we're sitting at 54.39, right? They would only get assigned if it hits 55 at these sold calls, right? It has to be 55 for them to get assigned, right? And then they lose these shares, but they're going to get paid $55 for each one of those shares that gets assigned, right? Well, if, let's say, tomorrow the price dips a little more and it goes down to, let's say, right at this resistance at 51.93, right? They will literally have collected this $1 million, and these will expire worthless, and they still get to keep that $1 million, right? So then look at this breakdown. The net credit is $208,000 for all these call option contracts, right? The max loss is 1.7 million, right? Which is usually going to be the cost of this, these two in the middle. Their max profit potential though is 2.8 million. All right, so now let's break down this trade. Down here is the easiest way to interpret the trade. Again, I like to click on profit and loss because it gives you a visual. The alert specifically was for November 19th. So we go into November 19th. November 19th is here. So if you're looking at this from the perspective of, let's say you took $1.3 million and you put it into Snap and you broke it down into these option contracts, what do you want Snap to do? Clear as day, you want the price to go up, right? As long as it goes up after tomorrow, this Friday, right? Why? Because you want this contract specifically to expire worthless, right? Or excuse me, through November 19th. So you want these to expire worthless, or for Snap to stay below 55 before November 19th. For this to expire worthless, you keep the 1 million. And then after November 19th, so after, right, if it goes back up to the 70s, right, or let's say, what did we say the resistance was? 78. So if it goes back up to 78, somewhere right here, right? Let's just say the very next week, you're going to make $3 million. Easy. Super easy. But in either case, the point is you want that price to go up. Because even if it does go up, let's say sooner, they're still going to pocket $2 million. They're just going to lose these shares here, but they're still going to get paid $55 for them. So it's not necessarily a loss, right? Meaning it's still a very bullish trade. So to me, that's interesting, right? If you're willing to put on a company that just ran down on an overreaction 1.3 million, that's a pretty bullish sign. That's how I'm interpreting it. I will be entering a position. I missed my opportunity with Snap, or not Snap, with Pins, with the overreaction they recently had back a month and a half ago. I knew better when I saw it drop that far. I actually made a video on it. It's in my video log. It's like one of my very first videos. I had just started recording too, like when that happened, but it's kind of funny. The other thing I do want to mention, I have Lucid Tracking. If you go in Lucid Tracking, it actually gives you access into their positions. As you guys can see, they do have Snap. If you go down here where it says charts, you can see the pink line is ARC W, the blue line is ARC F, and then the purple line is aggregate of totals, right, between both of those ETFs. The gray line is the price of Snap. Well, look, anytime it spikes, they take profit. Pretty reliable, pretty reasonable, right? If something's going to spike, you're going to take profit. But look at this. This overreaction, when the price dipped, what did they do? They bought, right? And they're sitting currently at a total of, what is that? 1.646 million shares. That's a lot of shares to be holding for something that just took that big of a dip. For you to increase your position that much substantially, that's another bullish sign. So this does make me super bullish on Snap. This is how I found it through the alerts. I hope this helps. If you guys have questions, as always, leave it down in the comments below. Please don't forget to like and subscribe to the channel if you appreciated the information I provided. And otherwise, guys, as always, I'll catch you guys in the next one.